The headlines have shifted. Maduro is in New York. The airstrikes are finished. The press briefings are over. But the real story is only starting. What happened in Venezuela is not a courtroom story. It is a system story. This analysis steps away from the spectacle and looks at what actually happened, not through personalities or politics, but through structure. It follows how an operation presented as law enforcement fits inside a much larger strategy involving resources, trade routes, and the control of economic systems that shape global power. For years, pressure was applied quietly. Sanctions tightened. Financial channels narrowed. Energy markets moved. China's economic footprint spread across South America. Venezuela did not suddenly become important. It became unavoidable. What looks sudden is the last move in a long sequence, where negotiation gave way to force and market logic replaced diplomacy. This report examines why this happened now, not earlier. Why oil pricing, currency systems, and China's role in the hemisphere sit at the center of the decision, even while official explanations keep changing, and why the contradictions between public statements reveal more than the statements themselves. Right now, across every news network, you're watching the same story on repeat. Special forces dropping from the sky, a Latin American president in handcuffs, commentators celebrating tactical precision and strategic brilliance. They want you focused on the spectacle, on the daring raid, on the military success. Because if you're watching the helicopters, you're not watching the balance sheet. This wasn't regime change for democracy. This wasn't about human rights abuses or drug cartels. This was a debt collection operation with gunships. There's an old rule in geopolitics that everyone pretends isn't real. You cannot sanction the countries that control your vital resources. Not forever. Not without consequences. For 23 years, the United States tried to break this rule. They sanctioned Venezuela. They froze assets. They recognized parallel governments. They funded opposition movements. They did everything except the one thing they just did. Until this week, when all of that collapsed in the most revealing way possible. On December 28th, Nicolas Maduro signed energy agreements with China worth $18 billion. 2 days later, Jake Sullivan, the National Security Advisor, quietly requested a meeting with Venezuelan officials in Panama, not to threaten, not to impose terms, to negotiate access to oil that Washington has spent 2 decades trying to destroy. What you're witnessing is not diplomacy. It's surrender, interrupted by helicopters. The media has been selling you a story for years. They told you the shale revolution made America energy independent. They told you the United States is now the world's largest oil producer and therefore doesn't need to care about the Middle East or Latin America anymore. This is a half-truth. And in geopolitics, a half-truth is a full lie. The United States does produce huge amounts of oil, but it produces light, sweet crude. It's like champagne, bubbly, light, expensive to extract, and not what American refineries were built to run on. The problem is this. The massive refineries in Texas and Louisiana, the industrial backbone of American energy, were built 50 years ago. They were designed to process heavy, sour crude, thick, sludge-like oil that comes from Venezuela and the Middle East. America produces champagne, but its engines run on diesel. For decades, they solved this by importing heavy crude from Saudi Arabia. But that relationship is effectively dead. Saudi Arabia is no longer the West gas station. Riyadh is cutting production to keep prices high. They're joining BRICS. They're ignoring calls from Washington. The Saudi prince has made it very clear. He is no longer interested in being a vassal state. So the United States faced a mathematical problem. They were running out of the specific kind of oil needed to keep their refineries operating at full capacity. And worse, they had already played their emergency card. Over the last 2 years, the administration drained the Strategic Petroleum Reserve. The SPR is meant for war. It's meant for national emergencies. It is not meant to buy votes by artificially lowering gas prices before elections. Yet they opened the taps. They flooded the market with millions of barrels to keep prices down. Now the bill has come due. The SPR is at its lowest level since 1983. 351 million barrels. That's it. Under the Biden administration, 180 million barrels were released in 2022 alone to control prices after the Ukraine conflict began. Those barrels have not been replaced. The International Energy Agency projects a shortfall of 1.2 million barrels per day for 2025 if tensions with Iran escalate and Russian sanctions remain in place. So Washington looked at the map. They looked for heavy crude suppliers. Canada is already pumping at maximum capacity. Russia is sanctioned and hostile. Saudi Arabia is uncooperative and pivoting toward Beijing. That left only one option: the massive heavy crude fields of the Orinoco Belt. Venezuela. This is what this is really about. Not oil volume, but oil pricing. Venezuela has the largest proven oil reserves on Earth, roughly 300 billion barrels. But production has collapsed. Under Maduro, output fell from over 3 million barrels a day to under 1 million. Infrastructure decayed. Investment stopped. Skilled workers fled. So if Venezuela isn't producing much oil, why does it matter strategically? Because it's not about current production. It's about future control. For 50 years, global oil has been priced in US dollars. This system, called the Petrodollar, creates automatic demand for American currency. Every country that needs oil needs dollars to buy it. That demand allows the United States to borrow cheaply, print money without immediate inflation consequences, and finance its debt at lower interest rates than economic fundamentals would otherwise allow. But that system is cracking. Saudi Arabia refused to renew its exclusive dollar agreement. BRICS nations, Brazil, Russia, India, China, South Africa, are increasingly settling energy trade in local currencies or yuan. And Venezuela, according to multiple reports, was preparing to fully integrate its energy sector into China's cross-border interbank payment system and price its oil in a basket of currencies led by the yuan. If that had happened, China could buy Venezuelan oil without holding dollars. If China doesn't need to hold dollars, demand for U.S. currency drops. If demand drops, the dollar's value falls. If the dollar falls, the cost of servicing American debt explodes. This is the threat. Not that Venezuela would sell 1 million barrels a day to China, but that Venezuela, sitting on 300 billion barrels, would prove you can price oil outside the dollar system and survive. That's what Washington couldn't allow. The American dollar is not backed by gold. It hasn't been since 1971. It's not backed by industrial productivity. The manufacturing base has been hollowed out for decades. It's backed by one thing: an agreement made 50 years ago with Saudi Arabia. Oil must be sold in dollars. That is the magic trick. Because every nation on earth needs oil, every nation needs dollars to buy it. This creates permanent, artificial demand for U.S. currency. It allows the United States to print trillions, export inflation to the rest of the world, and avoid the consequences. This system is called the exorbitant privilege. It's the source of American prosperity for half a century. But lately, the magic has started to fade. In June 2024, the Saudi American Petrodollar agreement formally expired. Saudi Arabia did not renew it. They now accept Chinese yuan for oil sales to China, their largest customer. In November 2024, the United Arab Emirates processed $128 billion in bilateral trade with China entirely in yuan. Russia sells oil to India in rupees and rubles. Iran sells to China in yuan. The dollar's share of global foreign exchange reserves fell from 71% in 1999 to 58% in 2024. Each percentage point of decline represents roughly $350 billion in reduced demand for U.S. Treasury bonds. Here's what most coverage is missing. Venezuela didn't happen in isolation. It's one move in a continental economic contest that has been building for 2 decades. China, Latin America trade hit $518 billion in 2024. That's not a typo. Over $500 billion. And it's growing at roughly 30% a year. 20 years ago, China accounted for less than 2% of Latin America's exports. Today, China is South America's largest trading partner. Brazil trades more with China than with the United States. So does Peru. So does Chile. Ecuador signed a free trade agreement with Beijing in 2024. Nicaragua did the same. 22 out of 33 Latin American and Caribbean nations have joined China's Belt and Road Initiative. This isn't just trade statistics. This is infrastructure. China now owns or operates major ports in Peru, Brazil, Panama, and Ecuador. The port of Chanquay in Peru, which just opened, is designed to move exports from 6 South American countries directly to Asia, cutting the United States out of the supply chain entirely. So when you hear about Venezuela, understand the context. The United States is watching its historic sphere of influence shift economically toward Beijing. And that shift isn't abstract. It's ports, railways, energy contracts, and payment systems. Venezuela currently produces 780,000 barrels a day. Under Chinese technical management and Russian financial support, that production could reach 1.4 million barrels a day within 18 months. But here's the problem that triggered this entire operation. That oil is already committed. China signed oil prepayment contracts, with Venezuela worth $62 billion between 2007 and 2024. Russia provided another $17 billion in credit lines backed by crude shipments. The United States tried 4 strategies to break this encirclement. Every single one failed. The first strategy was maximum pressure through sanctions. It failed because Venezuela built export networks completely outside the SWIFT banking system. Ships with flags of convenience, payments in yuan, refineries in Malaysia. Washington discovered that sanctioning paper doesn't stop oil molecules from moving. The second strategy was regime change through proxies. They spent millions backing Juan Guaido, recognizing him as the legitimate president, even though he never controlled a single military barracks. By 2023, even the Venezuelan opposition had abandoned him. American recognition became an international joke. The third strategy was diplomatic isolation. It failed because 134 countries never recognized Guaido. Latin America, including Brazil, Colombia, and Mexico, restored full diplomatic relations with Caracas between 2022 and 2024, completely ignoring Washington's objections. The fourth strategy was conditional licenses, allowing companies like Chevron limited permission to operate in Venezuela, but with strings attached. This is failing right now because Maduro learned the fundamental lesson. Never trust American concessions designed as control levers. And then came the final trigger. Intelligence reports that mainstream media is conveniently ignoring suggested that Caracas was preparing what financial analysts were calling a nuclear option. Venezuela was on the verge of officially integrating its energy sector into China's cross-border interbank payment system, CIPS. They were preparing to price their entire reserve, the largest on Earth, not in dollars, but in a basket of currencies led by the yuan and backed by gold. If this had happened, it would have been a signal to the entire global South. It would have proven that you can hold massive resource wealth outside the American banking system and survive. Washington saw this as an existential threat. So Washington had a choice: accept the new multipolar reality and negotiate as an equal partner, or use the one asset they still have in abundance: military force. They chose the gun. The operation itself was, from a purely tactical standpoint, extraordinary. Delta Force operatives extracted Maduro from his residence. No American casualties. Maduro is now on a U.S. warship heading to New York to face a sealed indictment that's been waiting since 2020. Trump, at the press conference, couldn't contain himself. He said, "You're probably never going to get to see what I saw last night. It was amazing. These guys were moving so fast." He was watching it in real time from Mar-a-Lago like it was a reality TV show, because in his mind it was. But here is where the spectacle ends and the consequences begin. Trump and Marco Rubio were asked repeatedly at the press conference, "Who's going to run Venezuela now? How long will American forces be there? What's the plan for governance?" And they had no answer. Trump did say that American oil companies will go in and help Venezuela rebuild its energy sector. He was very explicit about this. He said it's pathetic how little they've been producing given their reserves, and American companies will fix that. He said the oil would go to other countries and to the United States as reimbursement for damages. Rubio walked it back the next day. He said the U.S. doesn't need Venezuelan oil. He said this is about governance, not resources. But the contradiction tells you everything. Trump says what the operation is about. Rubio manages the diplomatic fallout. Venezuela is not Panama. This is not 1989, when George H.W. Bush sent forces in to remove General Noriega. Panama had 3 million people. Venezuela has 30 million. Panama had a massive American military base in the strategically vital Panama Canal. Venezuela has neither. More importantly, Maduro was not a personalist dictator. This wasn't like removing Saddam Hussein or Gaddafi, where the entire state structure revolved around one individual. Maduro rose within a system, the Chavista system, a network of generals, intelligence chiefs, judicial officials, and paramilitary groups called collectivos that control everything from ports to food distribution. The defense minister is still in place. The interior minister, Diosdado Cabello, one of the most powerful figures in the regime, is still there. The vice president, Delcy Rodriguez, is still there. All of these people control pieces of the economy. Venezuela has many more generals per soldier than anywhere else on earth. About 20 times as many as you would expect in a normal military structure. Every general has a monopoly somewhere. They control mining concessions. They control ports. They control oil distribution. The military doesn't just defend Venezuela. The military is the economy. This is where the operation, tactically brilliant as it was, becomes strategically catastrophic. Because the rest of the world is watching. Every country in the global south, from Nigeria to Brazil to Indonesia, is looking at Venezuela and thinking the same thing. If we refuse to sell our resources in dollars, will they come for us next? This fear does not create loyalty. It creates an exit. At the BRICS summit in Kazan, Russia, in October 2024, Vladimir Putin announced the development of BRICS Pay, a blockchain-based cross-border payment system that completely bypasses the US dollar. Brazil is already piloting it for agricultural trade. South Africa processed its first diamond transaction in November. Iran and Russia are settling arms sales through it. Venezuela has just applied for formal BRICS membership. If accepted, and it will be, its 303.88 billion barrels of oil reserves will be integrated into an economic architecture completely isolated from Washington. The transition has already happened. The world simply hasn't recognized it yet. China's official gold reserves increased by 225 tons in 2023 alone. Actual purchases are probably double that, made through Hong Kong imports that aren't fully reported. Russia was fully excluded from SWIFT in 2022. Their response: build the financial message transfer system, now handling 30% of Russian domestic payments and expanding to 159 financial institutions in 20 countries. China launched CIPS in 2015. As of early 2025, it connects 1,423 financial institutions in 109 countries. It processes $436 billion in daily transactions, completely outside dollar-based clearing systems. The BRICS expansion in 2023 added Saudi Arabia, Iran, the United Arab Emirates, Egypt, and Ethiopia. That's 45% of the world's population, 36% of global GDP in purchasing power terms, and control of 72% of the planet's proven oil reserves. By striking Venezuela to secure its oil fields, the United States has proven exactly why the world needs an alternative system. They have validated every speech Putin and Xi Jinping have ever made about American unilateralism and aggression. Before this operation, countries used the dollar because it was convenient, stable, and the infrastructure was already there. After this operation, countries will dump the dollar because holding U.S. assets now means you are vulnerable. It means your sovereignty is conditional. The petrodollar is no longer a trade agreement. It's a hostage situation. Trump thinks he's demonstrating strength. He thinks he's showing the world that America is back. That it can project power anywhere. That it doesn't need to ask permission. But what he's actually demonstrating is desperation. A truly powerful country doesn't need to invade to secure resources. It offers the best trade deals, the best technology, the most stable currency. People trade with you because it benefits them. When you have to use military force to secure access to oil, when you have to threaten your neighbors, when you have to tear up the rule book and operate through pure coercion, that's not strength. That's the behavior of a declining power that can no longer compete on merit. And the world sees that. China sees it. Russia sees it. India sees it. Brazil sees it. Even allies like France and Germany see it, even if they won't say it publicly yet. The Venezuela operation has achieved the opposite of its intended goal. It was supposed to secure American access to oil and reinforce dollar dominance. Instead, it has accelerated the global move away from dollar dependence and proven that American power, while still formidable militarily, is strategically brittle. You can win every tactical battle and still lose the war. There are 3 possible paths forward, none of them clean. Path 1. Controlled transition. The U.S. brokers a deal with remnants of the existing government and the opposition. A transitional authority is formed. Oil contracts are renegotiated. Revenue flows are restructured. This is the best-case scenario. It requires cooperation from multiple factions and years of institution building. Path 2. Fragmentation. The government fractures. Regional power centers emerge. Some areas controlled by military units loyal to the old regime. Others by opposition groups. Others by criminal networks that fill the vacuum. Oil production stays disrupted. Investment doesn't arrive. The humanitarian crisis worsens. This is the Iraq-Libya scenario. Path 3. Economic counterpressure. China doesn't accept the outcome. Beijing keeps buying oil through shadow tankers. It provides financial support to resistance elements. It uses its leverage in other Latin American countries to isolate U.S.-backed structures. It turns Venezuela into a long-term economic battleground. This is the great power competition scenario. None of these paths resolve quickly. And the Trump administration has not explained which one it is pursuing or how it plans to navigate the complexity. Markets are pricing in the optimistic scenario. That Venezuelan oil comes back online, priced in dollars, flowing to American refineries and allied nations. But history suggests caution. Iraq was supposed to be quick. Libya was supposed to stabilize. Afghanistan was supposed to transition smoothly. Removing governments is easy. Building functioning states is extraordinarily hard. And the question nobody in Washington seems to be asking is, what happens if this doesn't work? What happens if Venezuela fragments? If oil production stays disrupted? If China doubles down on alternative supply chains? If other Latin American nations decide the risk of working with the United States is too high? Those are the questions that will determine whether this operation was a strategic success or an expensive mistake. And right now, we are too early in the process to know. What we can say is this. The economic contest for South America is no longer background noise. It's front and center. And the stakes are oil, dollars, and global positioning. The helicopters have left Caracas. Maduro is on a warship heading to New York. The news cycle will move to the next crisis within days. Maybe it'll be Greenland. Maybe Canada. Maybe something else Trump tweets at 3 o'clock in the morning. But the structural damage is permanent. The trust that held the international system together for 80 years. The idea that there were rules, that sovereignty mattered, that military force was a last resort, not a first option. That's gone. And you can't rebuild trust with press releases. Countries will remember what happened here. They'll remember that when an oil-rich nation tried to trade outside the dollar system, American special forces came in the night. And they'll act accordingly. The petrodollar era is ending, not because of inflation or cryptocurrency or any of the things financial commentators talk about. It's ending because the United States just showed that the system is no longer based on mutual benefit. It's based on coercion. And in the long run, coercion is more expensive than cooperation. The world is reorganizing. New systems are being built. New alliances are forming. New currencies are emerging. And the country that could have led that transition, that could have shaped it in a way that preserved its influence and prosperity, has instead chosen to fight it with everything it has. That is the tragedy here. Not that change is coming. Change was always coming. The tragedy is that it's going to be so much harder than it needed to be, for everyone. The helicopters were just the opening scene. The real story is what comes after. And based on every historical precedent we have, what comes after is going to be far more complicated than the people in charge are prepared to handle.